We're live and we are here. Yes, we're here. Let's go see what the market is doing first thing this morning. First thing in the morning. See how we've popped off. I believe we were going to have a gap up open. Let's see that if we did that. Okay, I need to move this over here first. And then you all can see my screen. Yes, you can. This is SPX. I'd like to go to SPX first thing. So that way we can see what the charts look like first thing as we have opened up this morning. If you're following me on Instagram, you have to come over to either Facebook or YouTube so you can see what's going on. I feel like I need some background music, but I don't want to stream anything else because I don't need my internet to be feeling overwhelmed while we're trying to get the work in. We're trying to put in some work this morning, and we do not need the market to be feeling, the internet to be feeling like it's being overwhelmed. Let me change this time frame. Usually when I trade the open and we look at the open, right? So that way you can see more readily what the price action is actually doing. When I start to trade anything, I really don't start trading till after 15 or 20 minutes or an hour, 30 minutes. It depends on what's going on. But I want to then I switch over to the 15-minute chart. But initially I start with the 2-minute or 5-minute chart. That way I can see what's happening there. All righty. Looks like the SPX opened at 45.70. Opened at 45.70. It went up just a bit. As I understand it, 45.54, 55, somewhere in there is some support. So I moved that line there for support. I do see a little bit of resistance there. 45.74 is some resistance. Right? So then we're kind of really between these two zones at this point. Oh, that's not what I wanted to do there. That wasn't the plan. I need to move this to the other screen. Okay, how about we do this? Because I do need to be able to see that, but not right there. There we go. And now I can go back to sharing. Present. Share screen. I needed to always remember the same website notification when sharing. It lets you pick so many things. All righty. This is where we are with our trade in the open, looking to see what's what. We look directly at SPX. First thing, you can look at SPY. There are some people who look at SPY as an indicator. I think if you're looking right at, what you want to see, whether that's the particular stock you want to see. I'm changing this to 2 minutes because a 5-minute feels like it's just taking way too long to populate with some candles. We want to see some action. Action. That's what we want to see, is some action. So there we go. I need to get me one of those non-sound mouses. A mouse that doesn't have the clicky sound when you're trading. You don't have the little clicky sound there. I hope everybody can see me in all the places. I see we got 3 people that are on. I want to make sure that everybody can see. Notifications. It says I'm live streaming, even though it looks kind of fuzzy. Looks a little fuzzy there. Okay, looks like we're still just kind of hanging into this area. So I wanted to talk about On Fridays, what do we normally do as a trader on Fridays? Before we open the market, we usually look at the VIX. I did a video the other day about the VIX, the volatility index, which is an indicator of fear in the market. This was yesterday. The VIX went up and up and up. Generally, when the VIX is going up, the market is going down. And we do know from 12 or 12:30 yesterday, the market was going down and the VIX was going up. Those two things are, opposite correlations. Here you see even this morning, the VIX looks like it's trying to climb even this morning. Kind of up and down here in the bottom. And when the VIX is going up, the market's generally going down. It's starting to go down now. You got a little bit of a down, two down candles, little bit happening here. That's what's going on with the VIX. We check the VIX in the morning. That's the volatility index or the fear indicator in the market. We generally check that. We look at the ES as the S&P futures. Usually we look at S&P futures before the market opens, so that way you can see, is there a direction, or does it give you any indication of a direction where the market is up? Is it down? Is it kind of doing like, because SPX, you cannot see SPX in the pre-market. You can see SPY. So SPY can sometimes give you an indication of what's happening, but you can't see SPX in the pre-market. So you can use SPY as an indicator to help you see what things may be doing. And you can use the the S&P minis, or S&P futures is what this is, the E-mini S&P futures. You can look at that, the ES, to give you some kind of indication. Now, the ES trades all the way through the night. It trades through the night. So you can, if you're those people who are futures traders, are looking at the ES all through the night, any time of day or night, making and or losing money. Hopefully making it and not losing it, but you can be doing it all night long. All night long. You can be doing it all night if you so choose. And yeah. So we look at the VIX, we look at the ES, we can take a check at SPY. SPY is just going to look a lot like SPX. Generally, it's very heavily traded. There's a lot of volume on SPY. You can see even during the pre-market of today, this SPY was kind of dancing around, but it was climbing even through the pre-market. But you can see, like yesterday this was yesterday, and then it's kind of climbing back up today, and it has opened. I sometimes will look closely on a very granular level, but a lot of times I like to look at just the overall look of it, because we can get caught into seeing the minute trade or seeing what's happening in the 2-minute window. And if you were to go to higher time frames or look at the overall scheme, you'll be able to see where price was going up or down, or just like what was the trend doing with that. Okay, what was the trend doing? So we do those things in one. We look at the ES, we look at the VIX, we look to see maybe what was SPY doing in the pre-market, what gives you an indication of what to look at when you first open. As a seller, we don't necessarily trade the open. There is volatility that's happening there, a lot of momentum. Everybody's up and excited, but not excited. That's not a word, but it's like excited. And when you're really excited, then you're excited. That's when you're really excited. But the first 10 to 15 minutes of the market generally is orders that are being processed, maybe 10 minutes, maybe a little around that time. But those are orders that are being processed that were put in overnight, because you can put orders in, whether that's individual people or companies, because really what moves the price of the market is not us little onesie people who buy one contract of this and 2 contracts of that. Actually, options contract is not even what moves the price. The options contracts buying and selling is not what moves the price of the stock. It's the other way around. The price of the stock is what moves the options contracts thing. And people say, oh, I bought a bunch of options. Well, that's not what moves the price. What moves the price of a stock is whether people are buying and selling the stock, not buying and selling the options. All right. That's a misunderstanding I think a lot of people have, is that you think a lot of options being bought is what moves the price. No, it's the price of the stock that moves the options. So there's orders that are put in for large orders and small orders, not large, small orders, large orders of buying, large orders of selling. And that's what moves the price of the market. So when the morning comes, then you have the price may move around based on orders that were put in overnight, either by the systems, the big banks, not just us onesie twosie folks, but brokerages and hedge funds and those people who can buy stuff a lot at a time. That's what moves the price of these stocks, right? That's what moves things. And then, just so you know, there is market manipulation. The market is being manipulated. I almost said manipulized, but that's definitely not a word. I will make some words up on my own, but manipulized is not a word. Don't use that one. But the market is definitely being manipulated. That's really what's happening there. It's being manipulated. Looks like we're still kind of hanging in this little zone here, starting off this morning. Let me switch over to like the 5-minute chart now. We're at 9:46. We've been in the market now about 16 minutes. Minutos we've been in the market. Let me get one more little bit bigger here. A little bit bigger here. Yes. Let's talk about some other things. So, as a seller of my community, we trade cash secure puts. We trade covered calls. I got you, Miss Sandra. I see you. We do cash secure puts. We do covered calls, and we do credit spreads. Okay. So let's look at the list. Where do I go find credit spreads? Where do I go find some of these ideas? I did a video a while back about where to go as a screener, where some screeners were. I'm deciding whether or not to just change and present from a different screen, which I probably just will. That'll be maybe easier, maybe not. I'll just diminish this. I need this back. There we go. What are you doing? Walk this way. Talk this way. Walk this way. Nope, that's what's going on with that. You can't do that. Oh, why? Oh, why? I need this one to come back over here. There we go. Now we're sharing again. Why does it feel like stuff is just moving around? And I put it where I got to look behind there. We gonna do better. There we go. I go over as a screener. One of the main ones I use for looking for cash secure puts and looking for covered calls is I go to bar chart. Hashtag bar chart. It's a free screener, but it does have paid parts. You can get a lot of this data you can get for free if you really want to be able to manipulate the screener to give you, if you want specific things, like you want to set the price limits and you want to filters, then you'll have to pay for bar chart. But they do have some free things you can use here. If you select options, you can go here under naked puts. This is going to give you the cash secure puts. I want to look there first. Starting with cash secure, we're talking about starting the wheel. WHEEL. The wheel strategy includes selling puts. You sell the put of a stock that you potentially wouldn't mind owning, but you can sell puts just for income. And you pick a strike that's below current price. You sell a put there, collect a premium. price goes expiration. If it expires above your strike price, you keep the premium and they release your buying power. If the price comes down into your strike price, then you're going to be put the 100 shares of stock into your account. And then from there, you can then sell covered calls against your newly acquired 100 shares. I love the wheel in that it's a good strategy to use because you always are going to have an asset. The shares are the asset. Options contracts are not assets, right? If you own shares, you can use your shares as collateral at the bank to go and borrow money against them. You can't go to the bank with options contracts and be like, I got, $30,000 worth of options contracts. Will you lend me money? The bank is no, they won't. But if you have $30,000 worth of stocks, they will lend against that because that is the asset. So when you're doing selling puts, you end up with an asset of shares if the strike price comes, and if that's part of your trading plan. If your plan is to trade for income, then you would want to enter or exit based on that. If you're doing it for stock acquisition, then you would enter and exit based on that. But I love cash secure puts because you don't have to watch them. You put on a cash secure put and you let it do what it do, because you know that if you get put the shares, you just sell covered calls. And if you don't get put the shares, you just rinse and repeat, right? So I go here to bar chart to look here. And I generally start with, these are the ones that bar chart has suggested to you. I'm not sure what the rhyme or reason is. And depending on when you look, what time of day, different things will pop up on this list, right? So I go here and check out. Now they've got Upstart. Some more expensive ones are up here at the top. Upstart, AI, Carvana. Those are a little more expensive. I usually look for the ones that are in the less than a 10 strike, or even down to the 4 and 500s, right? So now you see that AMC is here for selling cash secure puts against. They got decent premiums. EOSE is on the list. GLT. I'm not sure who they are. PGY, Tilray, and PGY again. They also give you I'm not sure what moneyness actually means. I read it, but I don't really understand what that means, even though I've read it so many times. They give you the strike price to pick, the expiration date. You can use what you should be getting as far as, premiums you're going to receive. They give you an indication of that, and all these other extra delta, the volume, the open interest. They give you all this other extra information. The implied volatility to see if it's a good move for you, right? Borrow from your shares to save on taxes. I heard that's a good thing to do, Raphael, is to borrow from your shares to save on taxes. But let's go look at one of the ones we looked at yesterday was Tupperware. It's not necessarily on that list. And if we look real quick at SPX, we see that it is kind of starting to climb a little bit. We'll come back to that because we trade SPX, look at entering there about 10:15 or 10:30. But let's look at Tupperware. That's one we checked out yesterday for a cash secure put. The premiums are up really nice, and I'm not real sure why the premiums are so nice. I think they had earnings. What's this question mark here? Earnings on 8/9. There we go. They're going to have earnings on August the 9th, so they haven't even had earnings yet. For a long time, I thought Tupperware was gone. And then I went to China and they had Tupperware stores. I was like, what? They still selling Tupperware? Then somebody did a Tupperware party, and listen, them prices ain't going nowhere. Tupperware is still real proud of their stuff. But Tupperware also knows you buy some Tupperware, you will have it your entire life. My mother had some Tupperware, and when she passed away a few years ago, she still had some Tupperware that when she used to be a Tupperware agent back when I was a baby. My mother sold Tupperware way back. My mama got Tupperware car. Did y'all know Tupperware used to give away cars? My mother had a Tupperware station wagon. She was a big baller shot caller in Tupperware, but she still had some stuff from when I was a child. It was still, my mom passed away, 74 years old, and there was Tupperware in there from her early adult life. It stuff will last forever. So since Tupperware knows they stuff go last forever, they price it in such a way that They price it in such a way to make sure that you you know it's gonna last forever, so you shouldn't have no problem paying $50 for this water pitcher that you gonna put Kool-Aid in. Because y'all know everybody got that Kool-Aid pitcher from Tupperware. Everybody's got that thing. Okay, focus, Arlissa, focus. This is what Tupperware is looking like as far as the daily chart is looking. So if we're looking for some support, I probably would say right in the 297, because this is where there's a gap here that's going on. This is our daily chart. You got a couple gaps below here. Let's switch over to the trade window. If we're looking for just 1 week out on Tupperware, how will we pick our strikes? Well, we're going to pick a strike below, picking a strike below current price. And you also kind of want to go with a delta or a probability out of the money. Y'all know, if you've been on here with me for any length of time, we look at the probability out of the money and the delta. I'd like to stay 70+% on probability out of the money, but I like the 2 strike here. The price of Tupperware right now is $314. It was $297 before in pre-market, so it's gone up a little bit even today. But I like the 2 strike. That means we're $1 below, 68% probability of success, probability of being out of the money. If you want to go one more to 80% probability out of the money, look at 1.5. Turns out at 1.5, the money you're going to make for premiums is only going to be $5. So you're going to leverage 1.5 times 100 shares. So you're going to leverage $150 of collateral, and you're going to receive $5 in premiums. If you go up to the 2 strike, though, you're going to receive $15 of collateral for $200 of, sorry, you're going to receive $15 of premium for $200 of collateral, right? So I like the 2 strike a little bit better. Before I do that, let's look out another week, because sometimes you can just look out one more week, right? We see for the 11th of August, the 1.5 strike, $150 of collateral is paying $15, and it's a 68% opportunity. So it's $15. I won't say only. It's $15 of collateral that you're $15 of premiums. I'm not sure why I keep saying collateral. It's $15 of premiums or money you're going to receive when you enter this trade. But I think I'm cool with just the 1 week. So the 2 strike, $15 of premiums you're going to receive. You could select this, this is on the single chart. You'd select this 2 put, and then you take in your $15. So if you want $30, you do 2 of them. If you want $45, you do 3 of them. But just know every one you do is going to take another $200 of collateral that the broker is going to block away of buying power. It won't cost you any money. All right. I want to make this clear. When you're a seller, you don't pay money to enter trades. You just, the broker blocks away your buying power. They reserve your buying power while the trade is going, so that if the trade goes well, no problem, they give you your buying power back. It's like a deposit. If the trade does not go well, the broker uses that money that they blocked away, that deposit, they use that to buy the 100 shares that you said, I'm willing to sell. I'm selling this put. When you're selling a put, what you're saying is, I'm willing to buy these shares at this price. It's weird, because you're saying I'm selling a put, but what you're saying is, I'm willing to buy them at this price. I'm selling a put, but I'm going to buy them at the price I pick. Puts work a little bit opposite than the calls. All righty. So that one picked up for $20. Actually taking in 10% within a week, taking in 10% in return, ROC, the return on your collateral. Your collateral is $200. You're taking in $20. That's a 10% return on collateral. Again, if you want more of those, then you just do more contracts. And if all goes well, the broker gives you your money back on Friday, or you can close it. You can close these trades anytime you want to. If you are fine with acquiring the shares of Tupperware, you just let it go and see what it's going to do. And if it comes down to the 2 strike, then that's Tupperware, though. And that's, we can do this with multiple things. You don't have to do Tupperware. If you're don't know anything about that stock, and that's not a stock you're interested in doing, then don't, right? So let's look at AMC. AMC is one I've utilized over and over, because AMC seems to have It really seems to like being in the $4 range. I almost said 4 o'clock. It likes being in the $4 range. If you look at AMC, $4 has been a constant support for them. It stayed above $4. So a lot of times I'll just do a $4 strike, a 4 strike. If we're looking for next Friday on AMC at a 4 strike, the 4 strike is going to pay $18 for $400 of collateral. That's about a 5% return on your money. If you want to get closer to 10% return, let's go out one more week. The 4 strike for August the 11th pays $43. The 4 strike for August the 11th pays $43. That's a 10% return on your money in 2 weeks. 4% return on collateral. And what you're saying is, if the price is below $4 on August the 11th, then the broker is going to put 100 shares in your account. And if it's not, then he's just going to release your buying power back to you to do with whatever you please. All righty. Let's switch back over to SPX, see what SPX is doing in the morning. I want to go back to Tupperware in a minute because I want to talk about what happens if you acquire the shares. What do you do for covered calls? At this point, let's look at SPX, see what it's doing. We get off the daily chart. We can go on to the 5 minutes, see what's been happening while we were over there checking out Tupperware and AMC. Seems like the market is trying to do a little bit of moving up. We're trying to do a little bit of moving up as we go this morning. Yesterday was such a down day that we probably fell down into a support area. The market would like to go back up to capture some of that, but now we've got a huge gap right here. And the market does not like gaps, but we've got a gap from here. I want to change it to green, so that way I will remember that this is a gap. Okay, let me edit. There we go. Edit the properties. I change it to green, and I usually change it to like a slotted line or a dotted line dash so that I'll know that's the bottom of a gap. And then it gapped up to, moving it to here, gapped up to here. No, I don't want auto zoom. I want to edit the properties of this. It lets me know, because it's dash, it lets me know that that's a gap. That needs to, the gap will call, hey, over here, I'm a gap. Come on, price, come back. I'm over here. That's what will happen. That's what will happen. The gap will call to it and say, come back, come back, come back. I believe we're coming into a resistance area. Looks like we're retest this 45.79 is a retest area. We'll see if it can move on up like the Jeffersons to the east side, to a deluxe apartment in the sky. Do they have deluxe apartments in the sky? Yeah, moving on up like the Jeffersons. Alrighty, so looking at SPX, we check one of the strategies we use talks about the 15-minute chart to see when it breaks out of the 15-minute, and we look like this was the first 15-minute candle, and it has broken out to the upside, but it is coming into a resistance area, and it's about 10 o'clock. I'm not sure if anybody knows about the 10 o'clock turnaround. It's kind of like an unwritten thing, but if you look at most stocks around 10, 15, somewhere in there, generally, whichever you're looking at, it'll do a turnaround. And I think that comes back into, like I was talking about, the orders that come in when the market opens. You have orders that come in, and once all those orders are filled, then the price for what it's going to really start to do, it can start to do that. All righty. So this is what I see so far. We have an upside breakout going. Whether that will continue, we'll wait and see. Generally, if we're trading as a seller, let me make sure everybody can see me and hear me. As a seller, you don't have to jump in early. You don't have to jump in early, because sellers, we love time decay. And if you get further and further in time, as it decays, you can still make money. The whole point for us, for sellers, we want to make sure that that we can expire worthless for the most part, because we trade, in my community, we trade SPX and XSP. So we want to have it expire worthless at the end of the trading day. So the longer we can go into the trading day, still capture reasonable premiums, which we're usually shooting for 10%, still capture reasonable premiums in that, that case. We can wait. You can wait all the way up till, I told you, I've entered trades at 357 and 358. That's the literal end of the day. And I've gone into trades and collected premiums of $30 and $40 at 358. That's right at, a little bit less than 10%. That's like an 8% return in 2 minutes. But you can do in the morning, because some people, it fits your life to do the morning. So when it fits your life to do the morning, then you need a strategy that goes along with that. And we do have a strategy that goes along with your morning trading. There's a strategy for that. It's make sure that I'm going back to the right place. We have a strategy. Our strategy for you for trading SPX and XSP, SPX spreads for daily profits. Here is the training. It's here in the middle. This training includes instructions and foundation, credit spreads, how to do credit spreads if you're not sure about how to do them, SPX power hour strategy. So we talk about the strategy. How do we determine the different things to pick strikes that are going to be safe? We learned about the PDT hack. Anybody have pattern day trader? When you're trading these 0 DTE stocks, you have to be mindful of your day trades, because if you want to open and close it, it's going to cost you a day trade. So you need to have a plan. A PDT hack is a way to get around that rule for you. And it's by doing some other stuff basically, but that's a part of this strategy is being taught here in this little training. If you want to do SPX in the morning, there's a strategy for that. If you want to do it at noontime, if that fits your life, there's a strategy for that. And if you want to do it in the last 15 minutes, we've got that too. Or if you want to use XSP, which is less collateral, XSP is a one spread. You're able to get that same 10% return on your premiums using less collateral than you would if you were doing SPX, right? This is a training that is available in the Educator2Trader community. I'm putting the link in the chat. So that way, if that's something that you're interested in getting, I'm telling you, this right here was so heavy. Shoot, there are people who came out of this training on Saturday and made their money back on Monday. And they've been making money every day this week. And they've basically, took the strategy and ran with it in a few days and have doubled and tripled the money they paid for this training right here. So that's the thing. Education, it costs you on one front, but it also gains you. It allows you to pick up speed. You don't have to figure it out for yourself. If somebody else has already been down the road and figured it out for you, you don't have to figure it out for yourself. That's what training will get you. It allows you to pick up speed. All right. And you can move faster. You don't have to fine tune it for yourself. Hey, Miss Shirley and Mr. Tristan. Hey there. You don't have to fine tune it for yourself, because what you need has already been fine tuned. Listen, we took the losses. So you can avoid taking the losses, because we've already taken some losses for you. All right. You see the market, it went up. It did hit that resistance area there at 45.79. And it has already started to even try to pull back away from there. We'll see how this happens. But once we get past maybe the 10-15 mark, we'll look to see about entering with a direction to see what's going on. Gaps matter. So if you don't know much about gap trading, this is called a buyer's gap, because it gapped up, right? A buyer's gap gapped up. That means that in all this space in here, there are buyers that are waiting in here to buy stock. There's orders in the automated system. There's orders in here waiting to be filled. But because price jumped up to 45.65, let's say a person had an order for 45.55 and it jumped from 45.37 to 65, then the 45.55 order in the middle is just waiting here for the price to come back to it. So this is called a buyer's gap because there are buyers waiting in here. Big buyers. It's not just, again, not just the little people like me and you. Of course, all things add up, but we're talking about big fund buyers who are buying in the millions of dollars. Like they say, I want to buy SPX at 45.50 or 45.45. Well, then they got skipped over because the price gapped up this morning. Okay, everybody understand what's going on with that? So when price comes back in here, it will come in. It may come in and kind of do a little dance because it'll pick up buyers and then ride up some more, pick up some buyers and ride up some more. That's kind of how that works. All righty. So there's buyers hiding in this buyer's gap. So when you manage and you're trading gaps, you kind of want to be beyond a gap as a seller, because the price comes in here, the price does want to fill these gaps. So if price comes in here, you want to be below this gap. If you're going to do a put credit spread, you want to be below this gap. Keep that in mind if that's the direction you believe it's going to be going. We also use our, probability out of the money. Y'all have heard me talk about that a few times on the option chain, using probability out of the money to determine the direction that we're going. Let's see, I switched back to the 5-minute chart. Let's talk covered calls. I talked about if you had your, if you were given the puts, if you were given the shares from Tupperware. Let's look at what Tupperware would look like. Let's say you were given, if you had the 2 strike, I think we talked about getting, if you had the 2 strike on Tupperware and you were given those shares at the 2 strike, let's go see. After you have been given the shares, after they've been put into your account, hey, Mike Jones, the boss, after they've been put into your account, then you want to go see, can I do a covered call? If you buy them for $2, because if they put them in your account, they're going to put them at the strike that you selected. So if you buy them at $2, you're going to want to do a covered call at 2.5. So we're in the week of August the 4th right now. So we'd have to, speculate. Let's say we were giving them last week and we were doing a covered call on them this week. Then the 2.5 strike is paying $85 in premiums. I honestly am not real sure how the premiums are so high, but the 2.5 strike, well, right now it would be high because that's in the money. Let's go to the 3 strike, would pay $60. The 3.5 strike would pay $50. And the way the covered calls works is that you pick a strike higher than what you paid for them, right? You pick a strike higher than what you paid for them, and you collect your premiums. If the price goes up through your strike, then you just release the stock and let them go away. It might be a good move to buy 100 shares of Tupperware at this point and do cover calls, because these premiums are looking like yes. They're looking like yes. So it might make sense to buy 100 shares at $3 or $2.96 a pop and then cover them like immediately at 3.5. Again, I don't know let's look at their chart one more time so we can do we feel like we're doing some investigative analysis, not just knee jerking. Let's look at, and I don't know anything about Tupperware as a company. I do know they've been around a long time. Y'all know that. I just talked about that for a while. They've been around a long time. I really don't know why their share is only $2. Maybe somebody else can speculate on why their shares are so inexpensive, but it looks like back in September of 22, they were up in the $12 range. So I guess they ain't really necessarily been no big expensive stock. Something was going on behind here. Let me see if I can get some more data, a little more time on my hands so I can see. Well, going a little bit further back, they were up as high here as $37, $38. That's in October of 21. They were up here in this range. So they've been on a downward ride. I wonder if they got CEO problems. You know how when the CEOs and stuff have issues, that's when stuff just goes, I don't know. Tupperware's got a different, they were big on their model, their business model was using Tupperware agents to sell their things to Tupperware parties. My mom used to always have Tupperware parties, having Tupperware parties and selling it this way. But now you've got so many other companies doing that same thing. That may not be their business model anymore. Whatever business model they have may not, according to this, may not be working for them. Whatever business model they have may not be working. I told you in China, I saw Tupperware stores, but I was like, Tupperware stores? I was shocked. I had to go inside so I could look. Had to go inside so I could look and see. Jamie says, my bank account is telling me no, but these premiums are telling me yes. Come on, R. Kelly. My bank account is telling me no. But these premiums are telling me yes. These premiums is saying go for it. Like Nike, these premiums are saying just do it, right? Just do it. I'm thinking $200. I mean, shoot, $200. Lord help us. Lord help us. That's what you do. Please help us. But these premiums, I'm telling you, that's like, okay, what's the deal with that? Anand, you know, these premiums are telling me yes. These premiums are saying, come on in the room. That's what these premiums saying. Come on in the trade. Yeah, these premiums are saying, come on in the trade. Y'all see how we switch from R. Kelly to Christian music? Come on in the room. Yeah. Got to keep it holy. That's what we need to do. Keep it holy. Oh, anyway, let's go see what's happening with SPX. Y'all got me acting silly early in the morning. Got me acting silly early in the morning. Let's see what's going on here. 15-minute chart. We coming into 10:15. Let's see if we got a breakout direction that is confirmed, because we did have, I do see the breakout as an upward breakout, but I want us to confirm it. Then 10:15, 10:30. We're very versatile over here. You better know it. Music is music. It all started with the church anyway. You know, all of it started in the church. I'm gonna give God the glory for all of the music, because he is the author of the music. And you know, I won't get down my rabbit hole of the music originator and all that he has done. But yes, okay, so we're looking here at some numbers, right? Covered calls. We talked about we could cover that. You could cover your Tupperware. And then this is the thing. Once you do a cash secure put, you receive the shares. If you receive the shares, you can actually close the trade before you get shares. You don't have to wait and take on shares. You don't have to. You can just trade puts for premiums. You don't have to trade puts for shares. And then you close it whenever you want. If you don't close it and you end up with the shares, you just do covered calls. And you do covered calls just above your cost basis. So if you bought them for $2, you do a covered call just above that, or just above, you know, your current price. Like in the case, if you bought them you got them for $2 and the price was at $3, then you cover it above what the current price is, but definitely always above your cost basis. No, you don't want to release your shares into the market or back to somebody who's paying you less than what you paid for them. You might as well just hold on to the asset. Now, sometimes that doesn't work for you, because I had one situation where I did a cash secure put, and we made some tremendous premiums. It was crazy. That probably should have been the indication. These premiums were even better than these Tupperware premiums, and the price just fell off a cliff. And we had, I think we might have had them for $2 or $2.50, and the price went down to like $70, 70 cents. Sorry, the price went down to like 70. No, it might have been 17 cents. The price went down so low, and there was like nothing you could do. So in those cases, you just, you know, be glad you took in premiums and then cut your losses and let it go. Hey, Jamie L. Hi there. So take a look at that. I'm seeing here that I believe our trend may be confirmed going here. So while we're here looking at our confirmed trend, we can take a look at, I'm going to take us to XSP. If you're a SPX trader, you can go ahead with that. But I was talking about this yesterday. This was part of our call yesterday. My call on my live call, and you can find it on my YouTube channel, is how to use $1,000 and make $100 a day. How do you make $100 a day or $500 a week using $1,000? That's what this little graphic here is on the screen. You have $1,000 that you would use. You would do 10 contracts at one spread, and for $100 in profits each day, you just need to make $10 from each contract. You need at least $10 from that contract in order to make $100 a day, which is $500 a week, right? All righty, so let's look at, we look like we got a confirmed trend maybe happening. Don't know who that is calling right now, but that's a no. So let's look at the a put credit spread, because we've got price at this point going up. Let's do us a put credit spread. Go over to trade. Y'all see how, y'all know how we've been doing it each day. We've been doing it in the afternoons at the 2 o'clock live. We're on here early today. We're here early today. I will be back at 2 o'clock though, so that way we can check and see how stuff is going. But we're looking at put credit spreads, looking at our probability out of the money column. Looks like we want to get at least 75%. At this time of day, you want to, get, not to be too risque. But 456 has an 82% probability out of the money. 456. So let's switch over to verticals. 455, 456 is going to pay at this point it's paying $10. It's paying $10 at this point. If you were going all in with your 10 contracts, then you'd put your 10 in there, $10 a piece. You do your confirm and send. Actually, what I may do is I may change it to $1 more. See if we can we can offset some of the fees with an extra dollar. 10 contracts, $10 a piece. That's your $100 a day. You put your trade on first thing in the morning. Well, I say first thing, it's 10:30 almost, so an hour after the market has opened, and you're looking at it there. Let's go over to SPX though. I don't know if Anand, you're here with us. I saw you commenting there. Let's look at SPX just to see what kind of things. Now, what the strategy is a little bit different for SPX in that we're looking for not necessarily the probability out of the money strike, but you're looking for an amount of premiums for your first entry, because in the SPX, you're also pairing this with the PDT hack. When you're doing it with SPX, you're also partnering your SPX trade with using the PDT hack. You're making sure that you do the breakout with the PDT hack. We don't fool up with SPX all willy-nilly, because SPX is wild. Y'all saw yesterday, 12:30, SPX the market decided it was going down, and it literally did the I'm going down for the rest of the day. And if you were holding underneath, you just will be going down with it. But if you had a trade and your PDT hack had your trade, your profits locked in, then you wouldn't have to worry about whatever direction it went for the day, because your money was already secure. The PDT hack secures your profits. That's why we want the PDT hack. And if you don't know how to do it, go back up to that link I gave you and grab hold to that training so that you can see how to do the PDT hack. Looking here at the strikes, if I was thinking in here, I'm still looking at the I would look at the 45, 60, and 65. That's still, it will feel a little close because the current price is 45.80, but you're looking for premiums. Like I said, I would look in this range though. PCS put credit spread side. You're looking to get about $100. What in the world? $100 of premiums. That looks weird. It usually puts a zero next to these. When did they start leaving off the second numbers? Here we go. 45, 65, 70 is paying $105. Is $1.05 is what it's paying. So you could pick that strike. And for those of you who are in the chat who are from my community, if I'm off base on these strikes, y'all speak up and say, I wouldn't do that one, I would do this one. But based on what we do, I see that the 45, 65, or 70 would be a place. Now, that's not below the gap, which is why you need to make sure that if you're going to do this strike, you need to be sure to use the PDT hack. Otherwise, you want to get below the gap, and the gap is 45.35, which is down here, right? If you get below that gap, there's not much money below the gap because price is going up. We're starting to come down a little bit, 45.79. Okay. We're looking for like $100, 45, 65, 75 would be the place where we would pick that strike. 45, 65, 75 is where that is. Wait and see if that will pick up. I think it said it was $110. Let's see what the monitor tab says. Monitor tab shows you what's actually going on. What's going on? It shows you what's going on. Actually, the credit is higher than the $1.10. When it comes back to that, it's going to pick up. Hey there, Shanae. It's going to pick up, right? But it's that price must be coming down a taste, because if it wasn't, this would be going lower and not going higher. Let's go back to the chart or to the trade screen. Oh, there we go. Just picked up $1.20. $1.20 on the premiums side means that you got $3.80 in the max loss. $1.20 profits is $3.80 max loss. If you're locking in your profits with the PDT hack, you need to add to the $3.80. You need to add to the $3.80. Did that pick up? That one did pick up. Okay, so we're adding to the $3.80. Same strike going across here. Let's say we add $50. We took in $120. You want to add to the $3.80. Adding $50 would take us up to what? $4.30. 4.3. Lock in your price there, and you're putting this trade on, so that way you're going to let it just work until the premiums get to where you want it to be. That's how we're doing that. That's how we're doing that. If we have any questions in the chat, or in the comments, y'all go ahead and ask them to see what kind of questions we have going. Let's switch back to the SPX chart and see how things are looking over here in SPXville. Shanae, are you off on summer school? Are you off on summer? Are you taking a mental health day? See how the price hit here and turn back? You taking a mental health day? Is it summertime? It is summertime. I hope you're taking some time for you. Ooh, look at this candle here. Didn't we have a 10 o'clock? We had a 10 o'clock announcement of some sort. Was the University of Michigan announcement at 10 o'clock? It took all these minutes for it to decide to drop. This is a 10:25 candle. The meeting was at 10 o'clock, which I guess would have been back on these candles. Now, this is a key when you're doing your charting. Before every morning, I was talking about the things we look at before we start to trade. Another thing we look at before we trade is we do a chart. You need to chart your stuff and do your charting, so that way you can see where your supports and resistances are on the chart. Speaking of which, anybody who's on Instagram with me, come over to YouTube and join us in YouTube or my Facebook at Educator2Trader so you can see my screen. Come on over and join us in YouTube. And then while you're over there, make sure you subscribe to the channel, like, subscribe, pick the bell notification, click the thumbs up, all the stuff that they tell you to do on YouTube. Go over there and do all those things, please. You can check us out on Facebook. I have a Facebook group, Educator to Trader. You can go to, it's a private group. You can go and ask to be let in, and we'll let you in to Educator to Trader Facebook group after you answer the questions. You got to answer the questions. All right, then you'll be very welcome in, right? All the social media spots. We also have a membership every morning. Me and the membership, we have a morning call, a pre-market call, where we talk about all the stuff in the market that's going on that we can see that happened overnight. We talk about earnings, which we didn't talk about. That was one thing we forgot this morning, was the earnings. We talk about earnings. We talk about, whatever support and resistance levels are on the market. What did the market do yesterday? We celebrate one another and our wins. We always include that. In the membership, we also have exclusive Telegram where we all can trade together and we hang out together and support one another in our trades. We do a virtual power hour every other weekend. We also have coaching calls where we talk strategy and make sure we can, again, fine tune the different things. We have, we went through it a couple of weeks ago. We literally have 15 different tools in our bag that we can use depending on your situation and where your station in life. Sometimes you got time in the morning and you can trade morning stuff. Some stations of your life, the morning doesn't work for you and you need afternoon. Like, for example, for me, last semester when I was teaching, I didn't teach till 11 o'clock. I remember 11:50. I didn't teach till later in the day. So I had a little bit of time in the morning. But now in the summer, I'm teaching my summer class that I'm teaching at the university. I teach at 9 o'clock. So I'm teaching when the market opens at 9, I'm teaching. So I needed to use strategies that allow me to trade in the afternoon because I can't watch stocks all morning. I teach from 9 to 12:30. So I'm focused on, trading all those, teaching, not trading, training all those mathematicians that are up and coming. I'm training those from 9 to 12:30. And then I got to drive home and then I do 2 o'clock live. So then my life is that my days are pretty full all the way up until 2:30, 2:45, which means I had to have a strategy that covered that I can watch and do in the afternoon. So when you have different strategies or different tools in your bag, you can use them at will, right? But that's the key. I don't think people should try to trade all the different strategies at once unless you've got a strong command of the information. But it would be good to have other strategies to choose from that you can choose to trade. It would be good to have better tools or more tools in your arsenal. What plumber, if a plumber came to your house to work and all he had was a screwdriver, you're going to wonder what kind of plumber. Is he a master plumber? If a carpenter come to your house and all he got is a hammer, you're going to be like, is he a master carpenter? You're going to be wondering. You need more than one tool. And you may not use all the tools all the time, but when you need that tool, come on, Jesus. When you need that tool, you need to be ready or have it prepared to use that tool. Yeah. Y'all with me? I believe y'all get what I'm saying. Y'all picking up what I'm putting down. I believe you picking up what I'm putting down. Okay. So we talked about bar chart this morning, a place to look for your cash secure put and your covered call screeners. If you want to go straight to covered calls, you can also use that screener, use that bar chart screener and go straight to covered calls. Let me see if I still have bar chart open. I do. So if you were under options, like I said, you can go straight and you can do covered calls, and bar chart suggests these covered calls. Now, bar chart, in my opinion, gets a little close to these strikes. They give you literally the next strike up. If you're buying, shares, if you're buying shares in order to do this, you want to be not this one. I think bar chart does good on the covered calls. I'm thinking about the credit spreads. Bar chart get really close to credit spreads as far as the strikes go, almost too close in my opinion. So definitely do your own research and planning. See, Tupperware is on here. Top of the list, 3.5 strike is selling for 18. You're pulling in $75 in a couple weeks worth of releasing your, allowing your shares to be borrowed from the market. I'm telling you, Tupperware is calling. I hear you calling my name. Then you can look at credit spreads. You got call credit spreads or put credit spreads if you want to look to see some opportunities there. If you're into bigger, other strategies, maybe you look at short iron condors. We're an iron condor crew over here in the E2T crew. We like some iron condors because we love being able to utilize our premiums, our collateral on two sides while making more premiums. We like that. We like to do that. So if you're looking at iron condors, they also have a list here of some iron condor suggestions, some suggestions for iron condors. I might look at that intel. All righty, so I want to share bar chart with you. It's a free screener. If you want more filtering and all that good stuff, you got to pay. You got to pay for it. And I've used it as a paid service and as a free service. It is worth the payment. I think it may be like $199, $159 for a year. It's worth it. If you know what you're using and you know what you're looking for and you have a defined strategy with different criteria, bar chart is worth it, right? I didn't use it to its maximum capacity. That's why I'm okay with using the free one. But if you want more, you can get more for a very good price. It's got lots of usage. It got some stock stuff. It provides all these things for the stock screeners. You got option stuff, ETFs. I mean, futures, they got currencies. You see, all these things are here. That's why it costs what it does. It's, again, I don't think it's too expensive. I just think you need to just know what you're doing when you're going to use it. You need to make sure that it serves you because it will. All righty. We talked about bar chart. We checked up on SPX and XSP. We looked at that. It's kind of hovering here around this resistance area. And if it can't push through, then it will probably, turn back. The moving averages are starting to come together a little closer. They split off and now they're coming back. So we don't to watch. If they start to cross over, that'll mean we're going in a different direction. All right. We looked at SPX and an XSP trade. And how would you find those? I also put into the chat that if you're looking for training on how to use SPX and XSP every single day for profits, if you want to make $500 a week using $1,000, that XSP is what you need. You can honestly do it with SPX too. SPX, I would consider a little more risky just because you're putting more money on each contract. The spread of SPX is a five spread. So you're putting $500 of collateral for each contract. And XSP is not the same, but you're still looking for similar returns, right? So you can use either one. If I'm being honest, you can use either one. I just want you to get a lot more training and understanding if you're going to use SPX. All right. All right, you all. I believe I've covered everything I was going to cover with the open. I'll be back on here at 2:00 live. And I want y'all to come on back to visit us at 2:00. Got to see, we're going to close out the week, see what the week has held for us. And how do we prep ourselves on the weekend for the trading the subsequent week? What do you do on the weekend and get ready to make money during the week? Because I've read somewhere or heard somewhere, whatever, that the money in the market is made on the weekend. So you use that downtime in certain ways. There's certain things you do on the weekend that are going to get you prepped and ready. And we're going to talk about that at 2:00 today. Okay. What do you do to get ready? Get ready, get ready. Yes, I said you finally finished Montessori training and you're heading to the water. Oh, right. Tell me which water. You send me a text message. Tell me which water you headed to. You need to fly to Florida so you can come visit. All righty. I'm going to stop sharing here. And I see the thing. Oh, it says stop share right there. There we go. It says stop share. Okay. I'm going to stop sharing. We do two things in this community. Y'all know what they are? Who knows the two things we do in this community? We stay green and we get this money. All righty. I'm going to see you all at 2:00. All righty. Thank y'all for hanging out with me this morning. Appreciate you. Talk later. Bye.